Hello, everyone. This is Nina Olson from the Center for Taxpayer Rights, and we're here with our fourth tax chat. And I'm really honored that we have Erich Kirchler here from the University of Vienna, recently retired, but busier than ever. And we're going to talk today about the psychology of tax behavior, the economic psychology of tax behavior, taxpayer behavior. Now, Erich, as I'm sure most of you know, has had an illustrious career in research in psychology and economic psychology, first at Linz and then at various places, most prominently at the University of Vienna. And he's developed a theory called the slippery slope framework to explain tax compliance behavior. And we're going to talk about all that today. But I thought just as a beginning, we would have Erich just talk about how he got into taxpayer economic behavior. So Erich, do you just want to start like why you even started getting into this issue?
Yeah, sure. First of all, Nina, thank you very much for having me at your tax chats, and hello to everybody. How did I actually start with getting interested in this field? You know, studying tax behavior is really exotic in psychology. So it was not the topic which came first to my mind when I started at the University of Linz as a young assistant professor and associate professor later on. My first interests were in, well, definitely in applied psychology, but more in laboratory studies. 40 years ago, that was quite difficult to do, studying emotions in negotiation. That was the first topic. And then I became interested in mood and unemployment, and later on in financial decision making, especially household decisions. And from financial decisions, the step to tax behavior is not really a big one. I started at that time, I'm talking about about 3 decades ago. I started doing some small scale studies because I thought, well, tax behavior is a small topic, 1 or 2 studies, and we know everything. That would suffice. We did some studies at that time, which were mainly survey studies, where we wanted to know what people think, what comes to their minds when thinking about taxes. So we used all these qualitative approaches, which allow you, despite being qualitative, to do some calculations. And we found out that the different taxpayer groups, like self-employed entrepreneurs or white-collar workers, etc., they all have different concepts in mind when they talk about taxes, different attitudes, or let me say it as we call it in social psychology, they have different social representations in mind. Well, and after having done a few small-scale studies, I had the opportunity, at that time I was already at the University of Vienna, to take a sabbatical, half a year off. And I thought, well, if I want to really use it in a productive way this half year, I have to go far away so that I cannot be reached by anybody in Vienna, not for administrative questions, not for teaching necessities or whatever. And I decided to go to Australia at that time. Valerie Braithwaite invited me to stay at her department. And I started reading now very intensively about tax research. And from that on, well, it's the dominant topic in the research of my team and me.
Okay, well, let's talk about the different methodologies that, you know, as And I was going to say, you know, do you view yourself as an economist or as a psychologist? You know, who are you, Eric? But really more, you know, like last month we had some tax anthropologists on, and they spent some time talking about their methodology. And so why don't you talk about the different ways that, you know, the methods that you use to conduct your research?
Yeah. Well, asking me whether I'm an economist or a psychologist, definitely I'm not an economist. I was trained as a psychologist, but who knows what I am now. The topic is very interdisciplinary, and we have to collaborate with all different colleagues from behavioral sciences.
Yeah.
And that's fascinating, actually. It's also difficult because you need time to understand at least a little bit their languages. So I cannot respond to that question, who I am. I'm not a full psychologist anymore, but definitely not an economist. And the methods which we are using are similar to those used in behavioral economics, not in mainstream economics, I would say, but in behavioral economics, yeah, there is quite an overlap, especially when it comes to laboratory experiments. So the qualitative approach, which I still like, although I prefer the quantitative approach, but the qualitative one is still something where we try to gain initial knowledge about the phenomenon which we are studying, but then to take, let's say, sharper conclusions about what we assume or might be right or wrong, to test hypotheses and so on. If we are reaching that step, we are using quantitative methods, which are predominantly surveys and experiments in the lab and in the field.
I know that there's, you know, some controversy about the lab experiments. I mean, do you find them, you've obviously found them useful and informative, you know?
Well, I would say, yeah, I find them useful. I find them informative. Of course, this approach has its weaknesses, like any other approach. We learn a lot from survey studies. We learn a lot from interviews, focus groups, or these associative techniques. We learn a lot from experiments, but none of the methods which we use give us a full picture or information about the full picture. So I think we try to, if I can say it in this way, kind of triangle to see whether what we find in the lab is confirmed by surveys or in the field.
Right.
But indeed, you're touching a critical point, because there are differences in the with regard to the method which you use. And there were famous studies in the 70s, if I'm not wrong, conducted in the Netherlands and with colleagues from UK, where they did a great study collecting data from real people in the real field and survey data, and they found that there is not a huge correlation, not a convincing correlation between the results of the methods, which is critical, I would say.
So let's go to the slippery slope framework. You know, what led you to start thinking about the framework? And you know, I thought what was so interesting is that it really is describing a relationship between the tax agency and the taxpayer, rather than being just, you know, this risk penalty, you know, risk of detection penalty, sort of one-dimensional in a way analysis of tax compliance behavior. What got you into thinking about it? And then maybe you can just give an explanation of what the, if you can, what the slippery slope framework is, what it posits.
Yeah, yes. Well, how did I start with that? When I had this opportunity to study at the ANU, the Australian National University, stay there, just with all the time on my disposal, etc. I had already started in Vienna collecting lots of papers which were published in economic and in psychological outlets. So actually, I had sent 2 huge packages of material to Canberra, and that was all there before I had arrived. And I started reading. I started reading the stuff which they had produced there. I started reading what I had done. And I didn't know where all this reading would lead me. But I soon was convinced that economics is not wrong, but it doesn't tell us the whole story. And psychology is neither wrong, but even psychology doesn't tell us the whole story. Instead of concluding that psychology is more right than economics or vice versa, I thought, well, both disciplines have their insights, and it would be probably useful and successful to combine the insights. In economics, the focus was predominantly on punishment, on audits, on control, etc. In psychology, it was fairness, it was norms, attitudes, which were studied. And I thought, well, psychologists are very much on the soft side, on the trusting side, whereas economists focus more on instruments to enforce certain behaviors. And by combining all these approaches, I thought, well, there's one dimension which is power of the authority, which is important, while another one is people's trust in the authorities. And if you combine them, you easily find literature in sociology and political sciences which would tell you that power is probably most efficient when people trust the powerful, the legitimized authorities. And from that on, playing around, being back in Vienna, then also with my colleagues, we developed this slippery slope framework. Actually, the name was suggested by Henk Helvers, a colleague and friend back in the Netherlands. Because well, the main conclusion is actually that if you have the power to enforce people to follow certain regulations, to abide by the law, then you can enforce them. On the other hand, if you are able to show them that you're benevolent, that you're professional, that you're legitimized in your position, then people will voluntarily cooperate. And so we started distinguishing between enforcement and voluntary cooperation, and thought that power and trust are 2 dimensions which define a certain climate, a climate of interaction between different parties. And therefore, I think the main contribution by the slippery slope is that the focus shifted on the interaction from studies on individual behavior. We thought that the way they interact, the climate of interaction is important and will tell us whether people voluntarily cooperate or need to be enforced.
Yeah, I think for me, that was just such a significant insight. It sort of confirmed the things that I had observed over time as I would, whether they were my clients, whether they were the taxpayers that the Taxpayer Advocate Service dealt with, or you just go, and why were you doing this? And, it wasn't just, in every case, it wasn't just an individual there was some interaction with the agency, something that was happening that led to a particular response by that individual. And often with cases, you could actually pinpoint the moment where things went, what we would say, things went south. They just went downhill from that moment in that interaction. And I often thought if you could take a freeze frame of that interaction and look at, what went before and what went after, that would be very informative, both on the agency side and on the taxpayer side, to really understand and then use that knowledge to go forward. Yeah, really interesting. So you've then taken that framework and looked at, in different countries, how that framework might apply. Do you want to talk about your studies? I think you've looked at, about 44 different countries.
Yes, there was a study with several colleagues who are now spread over Europe, especially colleagues from Romania who were here in Vienna visiting us. We're collaborating a lot on that study. Well, actually, we did a lot of studies in the lab, and survey studies, scenario studies, etc., where we tried to test the assumptions of the slippery slope. And what we found was that in general, yeah, we get confirmation, but it's not, it was not so convincing as I had expected. And because sometimes we found that indeed voluntary compliance goes up when trust in a country is high, but sometimes even if power was high, cooperation, willingness to voluntarily comply would go up. And that was strange, because our initial predictions were that trust leads to voluntary cooperation, power reduces trust, and is, so to say, negatively correlated with trust and leads to compliance only if you strongly enforce people. Now, in many of our initial studies, we found this is not the case. And that led us to think more deeply, more profoundly about what power really means. And if you look back in the 50s, in the 60s of the last century, social psychologists, French and Raven, developed a theory where they distinguish between different kinds of power, or bases of power, as they called it. They distinguish between legitimization, professionalism, or expertise, and punishment, the power to reinforce somebody, etc., etc. So in other words, they distinguish between a harsh and a soft form of power, or as we call it later, legitimate power and coercive power. And what we found, and that I thought at that time, was that legitimate power is positively correlated with trust. It's actually a base of trust. It strengthens trust. And therefore, if we manipulate in our scenarios power such that it's more on the legitimate professional focus, in that case, we get positive relationships with trust. If we, for whatever cause, are more on the coercive side, it's correlated negatively. So we extended the slippery slope by distinguishing between these two forms of power. And later on, when we became interested also in emotions, we found that even coercive power can be positively correlated with trust and voluntary cooperation if, and that's important, if the authorities are able to target coercive power well. In other words, if they are able to detect the free riders who would exploit the system, the cooperative majority. And if that's the case, coercive power is perceived or is evaluated as legitimate and perceived as protection of the cooperative majority. So it became, from the beginning on, it became more and more differentiated. And when we tried to test the framework in these 44 countries, we found confirmation for the major predictions. But what I found interesting in this study was a result which we have not yet elaborated very well, actually. But it's more a suspicion, it's more an assumption, not yet tested fully. But what we found was that in some countries, in all countries, in all 44, compliance, self-reported compliance, was highest if power was high and if trust was high. Power of authorities on the top and high trust in the authorities. In that case, people in all 44 countries say they are very compliant. But in some countries, people said if power was higher, power of the authorities, then they would contribute more. They would be willing to be more compliant. In other countries, it was trust, which should be strengthened in order to increase compliance. And my initial guess was that, well, yeah, in countries like Western Europe, in Northern America, etc., people want the authorities to invest more in trust building. And then people would be compliant, even more compliant. And the opposite was the case, or seems to be the case. It seems to be the case that in countries like Pakistan, India, Afghanistan, etc., the authorities should invest more in trust building in order to increase compliance. Whereas in our countries, the authorities can invest in power. Probably because the trust base is already rather high, or relatively high, and therefore people would assume that power measures would be wielded in a very targeted way, very differentiated way, such that exploitation by free riders becomes unlikely. But as I said, this is an assumption which I derive from the data which we got in these 44 countries, but it should be tested empirically.
Yeah, I think that would be very interesting to test in the United States. And that sort of brings us to talking a little bit about, the work that you did for Taxpayer Advocate Service with Brian Erard. I was trying to think today when we first met, and you have a memory of our meeting before I have a memory of our meeting. But I do remember when we were both in Australia at ATAX, and I asked you, after you did a presentation, what would you do if you had access to IRS data? And that led to several, collaborations that we've done over the years, and the most recent being this study on the impacts of audits, not just on future behavior, but people's perceptions of the fairness of audits, and the different measures of that fairness, their view of the experience, and then of course their behavior after being audited, and looking at the types of audits that we've done. And this morning I was going through some of the research studies, and for the folks, on the watching, I will link these on the video to so that people can look at them. But one thing that, really loomed out at me is, this was, and you can certainly describe the methodology and how we, the sample size and everything, but it involved surveys of taxpayers who were sole proprietors who had been audited, and then a control group of taxpayers who had not been audited, as well as taxpayers who had experienced identity theft, and then a control group of taxpayers who did not have anything happen to them, what we sort of called the plain vanilla taxpayers. And we we developed a survey, you developed a survey. But what was really interesting to me was just looking at the taxpayers who had been audited. We had samples of taxpayers who'd been audited by correspondence, which is the vast majority of audits of individual taxpayers in the United States. Anywhere from 70 to 80% of all IRS audits are done by correspondence of individual taxpayers. And then field audits, where the auditor goes out and interviews the taxpayer in their place of business or in their home, and then office audits where the taxpayer comes in, but there's personal interaction in those two categories. And you all found that 39% of the audited sole proprietors did not recall their audits. And that included 45% of them that received refunds as a result of the audit. And you would think that they would realize that if they got some money back as a result of this interaction, that they would remember the interaction, and that the recollection for correspondence exam audits was especially poor, that the majority of folks did not remember that they had been audited. And that, one of the conclusions or the suppositions that you made was that, that people may not perceive correspondence audits as an actual audit. And that reminded me of a client I had who had actually been audited. And we determined that by getting her account. But she said to me at that point, oh, that was like an exam, like going to the doctor's office. And I thought, no, that, was an audit and there were real consequences of that. But that just story came back in my mind when I was just looking at this morning. So you want to talk about that? And we also are getting some questions in the chat, which is great. And just so people know, we'll be having a period of time where people can ask Erik questions too. So absolutely don't worry about that.
Yeah, but sorry.
Go ahead.
Nina, you're touching a very, very interesting point, the meaning of audits. What does an audit mean? What does actually a fine mean? How do people interpret it? And we should have Lotta here, who as an anthropologist could tell us more about the significance of audits and fines, which seems to be so clear in their efficiency when you look at the original economic studies, where audits and fines, of course, the higher they are, the more likely the risky option is the one which people would not choose. So you educate people by high audit frequency and fines. Now, in the lab, we find some very strange backfiring effects of audits. Luigi Mittone, a colleague from the University of Trento in Italy, for example, studied taxpayer behavior in the laboratory. He realizes rounds where people earn money and then they have to pay tax. And usually in his experience, and several of his experiments, people play 60 rounds, so to say. He simulates a lifetime of a self-employed. And what he observed was that immediately after an audit, people become less compliant. We did a study before I knew Luigi, actually, where we had people investing on the stock market in the laboratory, and they had to pay taxes on their earnings. And we found something similar to him. After an audit, compliance went down in the next round. It was still low compared to the baseline in 2 rounds after an audit, and then it went up again. Now, Luigi Mittone would say that people, after having been audited, think that the likelihood of a next audit in the next round would be very low. So they misperceive the probability in a certain way. We found that people become strategic when they are audited. You might have a group of people who voluntarily cooperate, but once you signal distrust by auditing them, they become strategic in the next periods. And moreover, if you audit somebody and find somebody cheating and punish this participant in the lab study, this participant will not only think that the likelihood of a next audit will be lower, but also try to get the money back, which he lost in the previous round by the fine. So you have these backfiring effects. And with colleagues in Amsterdam, we were doing a study on the national level, not on the individual level, but on the nation state level, where we found that if you are if you have too few audits in a country relative to the number of self-employed people, then non-compliance or tax evasion would go up. But if you have too many, it goes up as well. People become very strategic. So you have to exactly think about what an audit might mean and how it might be interpreted. And indeed, in the studies which we did with you, with TAS, we found that audits have an effect. Compliance or tax payments increase in the next years. But if there are audits without corrections, without adjustments, people become less compliant in the next years. So we see in lab studies, in scenario studies, but also in the field study with you, Nina, and also when we look at the individual or at the aggregate nation level, we see some effects which are not confirming the economic theory of crime. So, and similar things with fines. If fines are not perceived as a fine, but as a price, people would not change their behavior due to a fine. So this is quite interesting. And you were now referring to the different kinds of audits, correspondence, office or field audits. Indeed, it was very surprising that a huge percentage of people, when they were asked whether they had experienced an audit in the past, they said, yeah, we had some contacts with the IRS, and years ago I might have had an audit, but recently not. In case of correspondence audits, many thought this was not an audit. It was just an adjustment. They did something weird, perhaps, which they did not necessarily understand and not take the time to ask what it meant really. So we found that correspondence audits were not always conceived as an audit. And interestingly, attitudes towards the IRS deteriorated most after a so-called correspondence audit. And this was especially the case, of course, if people had experienced an adjustment, but also if they had got a refund. Yeah, so the refund was not helping much. People, to me as a psychologist, seem to be rather confused after the correspondence audit, after the message which they get. And I think this is quite important when we look at the future. We are digitalizing the world, and we'll have fewer contacts with people. And therefore, you cannot ask immediately questions for clarification, etc., etc. Yeah. There might be a growing feeling of helplessness, which of course would not help to increase trust.
You know, that's so interesting because one of the things I've always tried to emphasize about audits is that they should, and people who know me will just roll their eyes because I've said this so much, but they should be, the focus of the audit should be on education, that the increase in tax or the refund in tax is a byproduct of the examination. But the focus of the audit is that the taxpayer understand what they've done wrong, that also that there be an opportunity for the taxpayer to say, well, I think I'm right, and here's why, because the agency might actually learn that it had selected the wrong taxpayer. Why did it select that taxpayer? Does it need to look at its selection criteria? Or that there's a whole new issue that might have come up that you weren't even looking at, and there needs to be more guidance out there to clarify things. So for the whole point that that taxpayer knows what to do going forward, and that there might be an opportunity for the agency to develop better guidance for all taxpayers to know what to do going forward. And we found in some other studies that we did that in many of the correspondence audits, the taxpayer had no idea what they'd done wrong. They didn't necessarily, the government has power, so they didn't challenge the assessment, but they didn't know why they got this addition to their tax. And to your, and that sort of goes to, the work you've done on knowledge, how taxpayer knowledge affects trust and compliance, but also that feeling of powerlessness is very disturbing. And I agree with you, going forward into the digital, all digital text, a chat doesn't do it. I'm sorry.
Mm-hmm.
And then I think that there are downstream consequences to, your ability to get procedural justice. If you don't understand what was done to you, then it really raises due process concerns. Were you given true notice about what the government was taking action on so that you were able to challenge that action? You don't know what's going on.
Yeah, very much agree. And it's not only in the field of taxation where all that is important. You see now with the pandemic and the political regulations, people, when they have the feeling it's not consistent what they what the measurements are, when they feel it's not justified, or they don't understand exactly their arguments, they become suspicious, and suspicion or not knowing breeds distrust and not necessarily the discipline which would be required. Mm-hmm. And I think it's all over. But you were mentioning audits as a tool to educate people, to inform people. I think this is very important. And responsive regulation theory, mm-hmm. and the motivational postures by Valerie Braithwaite would indeed tell us that the majority of people are committed to do the right thing, and they might make mistakes. And in that case, unintentional mistakes, in that case, you really need to use the audit to educate people, to inform them. But of course, you have to have different tools in your toolbox. There are the others who are game playing, who are disengaged, etc. In that case, the iron fist, so to say, might be the only possible way to convince them to comply.
So I want to do two questions from the audience, then we can come back to maybe talking about taxes and emotions. And we've been talking about that on and off. And I don't want to butcher this name, but Luis Schwerl asks, I would like to ask whether there has been a difference between direct and indirect taxes. That is, would taxpayers have a different behavior depending on whether tax is expected to be translated to consumer?
Well, I think there are differences, but, and that's thank you for this question. It's important to mention that in psychology, in the lab experiments which we are running, but also in service, we are usually focusing on the individual taxpayers and on income tax. So I cannot say much with regard to this question. What we did were a few studies on VAT, on inheritance tax, but the results were not really different, perhaps due to the methods which we used. So I cannot say much about the difference from a psychological perspective, simply because I missed the studies. I don't know whether there are studies around, a few for sure, but I would not conclude anything at the moment from an empirical perspective.
So people can continue work in that area. That would be really
yes, but Nina, we were thinking about taxes, about economic stimulus measures these days,
right?
And one aspect which was keeping us busy was the reduction of VAT in Germany. So we had our assumptions about what might go on in consumers' minds when you reduce VAT from 19% to 16%, or from 9 to 7, I think. and then you go back to the old 19 and 9% VAT. So we'll see, but this is all speculative.
Yeah, and that sort of goes to prospect theory. Is it a foregone gain or is it a loss? So do you want,
Exactly.
how do people process that?
Yeah, we I think well, our guess is, and we'll see whether this big field study will give us confirmation or not. We thought that if you reduce VAT from 19 to 16%, in other words, in reality, by 2.5%, prices decrease by 2.5%. In that case, probably the difference doesn't reach the threshold of being perceived. So the reduction of VAT would not have an effect on consumption. But if losses loom much larger than gains, then in January, when Germany moves back to the 19% of VAT, people would have established a reference point of 16 and perceived the 3% increase as a really, well, perceivable as a high increase, as a loss.
Yep.
And therefore, we had all our speculations where we thought, how could they have done it better? Perhaps from a psychological or economic, behavioral economic perspective. And we thought, well, if they had said that VAT remains at 19%, but when you pay, you get a discount. Of 3%. In that case, people would have kept VAT and the discount on different separate mental accounts. And when you move back to the 19 and no discount, you would not combine the two phenomena, but perceive the loss of the discount not as a loss, but as a foregone gain.
Right.
Which in economic terms is exactly all the same, but in psychological terms, it would be quite different.
Right. And also you're viewing that when the discount is not continued, it means that the event that triggered the discount is over in some way. It's no longer needed. That's a different. We also had a question, I have a couple of questions. One is, are there any studies, and this is from Alex, are there any studies on the psychological effect on taxpayers of having a CPA or attorney representing them in the audit process? I can tell you that we did ask, I think we asked in the survey, were you represented? And we knew whether there was a power of attorney on file for the representation. But maybe what we did, actually, I think what we did was we only worked with unrepresented taxpayers. Is that right? I'm trying to recall what that survey was.
Yeah, I think so. That was at least our aim, to collect data from people who file their taxes themselves.
Right.
So we are at the beginning with a colleague in England. We are beginning to think about the role of the consultant, the tax. No, the focus was on the individual self-employed taxpayers who file their taxes, their income taxes.
Right. I've also thought, to sort of complete that 360, that it would be very interesting to be able to do surveys, et cetera, of the auditors themselves, so that you had, for a particular field study, you had surveys of the auditors who conducted the audits, the practitioners who represented the taxpayers in audits, and then the taxpayers, whether they were represented or not represented in an audit, and to see people's perceptions of that whole process. And we never were able to get permission to do a survey of the auditors inside the IRS. You know, I think, I don't know whether that was out of fear or there were just a lot of hurdles to being able to get that done. And I really regret that. It would be really interesting.
Yeah, I think it's even more difficult in Austria to get permission to collect data. And that, but I knew a couple of studies by Jane Frecknell-Hughes, who was studying tax advisors who are in this sandwich position, and the behavior, some other studies which were conducted, I think in Australia actually, where, but that was mainly, in that case, the focus was mainly on the tax advisors. And the question whether they would be a prolonged arm of the authorities, or whether they would act in the primarily in the interest of the taxpayer. And what they found was that, hope I'm not wrong, that in case the law is very clear, they perceive themselves as acting in the interest of the authority.
Interesting.
If the law is not clear, if there is room for interpretations, they work more in the interest of the client. But that's what I remember. We never did studies on these topics ourselves.
So we have another question from someone who asks, would the so-called crater effect after an audit be a function of a significant reduction in coverage in many tax administrations and hence detection? In other words, in contrast to the slippery slope, the power aspect is increasingly, increasingly able to be ignored. And from Roman Wood, the so-called crater effect after an audit be a function? Would the so-called crater effect after an audit be a? That's the same question. I see he's asked it in a different way. So the question is, in other words, in contrast to the slippery slope, the power aspect is increasingly ignored. And this is from Roman.
Yeah, well, I tend to say I don't think so. In the laboratory studies, perhaps yes. In the lab study, the laboratory experiment has the advantage that you can really clearly define the setting. There are no contaminating variables. You can test your hypothesis perfectly, but it's a not really very ecological valid setting. What we observe in the studies with you, Nina, and in other field studies is that actually audits have the intended effect, especially if there are adjustments made. Or you might assume that there is a flag now next to your name in the tax administration, and the likelihood will go up for an audit in the next period. In the laboratory with students, it doesn't seem to be the case. There's another reasoning, another interpretation of the situation which is going on. However, I would also like to say that in this huge field study with you, with TAS, we found that audits have this effect when there is an adjustment. If there is no adjustment made, it seems that at least that there is the possibility that an audit is perceived as a signal of distrust, and compliance goes down in the next year. If the audit comes to no adjustment. But there are other explanations as well, which play a role. One might be that people learn that some issues are just not taxable, and therefore they save on that.
Right. We saw similar behavior when we did a study on applying penalties to sole proprietors for underreporting income. And we found where people challenged those penalties on appeal, and got them abated, or when when the penalties were abated otherwise, or no change that where they were abated, people, their compliance went down in the later years, which is, again, there could be many different explanations for that, but one would be that, they learned to distrust the authorities, and also the authorities put them through this whole process, penalized them, labeling them as somebody in their minds as a bad taxpayer, and then they got it overturned. You would think, well, the process worked, you got it overturned, but it was, what did you put me through? And I'm going to get that back.
Yes. Yeah. We see that in our survey study, the huge survey study as well. Even if you get a refund, you're angry afterwards, and your attitudes towards the IRS are deteriorating, probably because the experience of the whole process is so negative.
Right. And we did see in the attitudes that people really had less trust because of the correspondence audits than the other types of audits. Yeah.
Yeah, and my guess is, of course, there are multiple explanations which could be thought of, but my explanation is that in an office or in a field audit, you interact with somebody, you get answers to your questions, etc., and that changes, because we know from fairness theory, even if you experience costs, if the procedure is fair, trust increases. Yeah, you might not be happy with an outcome, but if you understand why you got the outcome, you still trust the partner, in that case, the authority.
Right. Which also, again, goes to explanations, tax knowledge, things like that.
Yeah,
because
and this is a result with, sorry.
No, I was just saying it has implications for our digital age.
Yes, I think so, because this is a quite robust result, which you observe in organizational studies, like in studies with the authorities on the in the tax field.
So Les Book has a question, which is, are there insights into the best ways that tax administrators can increase trust and legitimacy, especially when there are resource issues and an increase in centralization and pressure to shift away from personal contacts? So,
yeah. Well, I still think that the so-called dimensions of trust are still valid, independent of how you interact with what media you interact with people. I don't know whether I remember all these different aspects which play a role in trust building situations, but definitely there's legitimacy and expertise, professionalism, competence, which is important, which is an important ingredient of trust. There is benevolence, which plays a role, integrity, fair processes, in other words, procedural fairness, and the willingness to correct mistakes which are made quickly and precisely, correcting the mistakes made. All this that leads to or does not deteriorate the trust dimension, but besides in competence, integrity, transparency, benevolence, stability of institutions, reputation, etc. Well, there is also value congruence. But if you digitalize the world, this value congruence is difficult to evaluate. In a study with colleagues in Adelaide, we had the opportunity to measure attitudes of tax auditors and taxpayers. What we found was that if they had similar mindsets about the issue, cooperation was judged as more positive and compliance was higher than when these different attitudes or patterns of attitudes differed between the taxpayer and the official. So I think if you digitalize, you have to make sure that that especially transparency and benevolence and correct treatment are assured.
You know, I think there would be many tax administrations around the world who would not want the adjective benevolent applied to them, you know, out of fear that that would be perceived you're being too lax.
Sure.
Yeah.
Mm.
And actually, there was a period back in 1998 when the IRS was going through a major reform, you know, and congressional review, which led to many taxpayer protections. You know, the IRS, there was a phrase, you know, that the IRS would be kindler and gentler, and that brought great derision, you know, in the press, et cetera, which always disturbed me. Like, why wouldn't you want a kinder IRS? You know, I mean, you want an IRS that, I mean, that doesn't stop it from having all the power and all the statutory tools and all the abilities that it has to enforce the law. It just said, you know, you're going to be open to the fact that people are just trying to comply. And those people that aren't, well, you've got all the tools still that you need to use, you can use against them, you know.
Yeah. Yeah.
Interesting.
Yeah, no, but I don't think being lax would help. At least would not increase your reputation, but being correct.
Yeah.
Yeah.
Yeah. Yeah. It's not, to me, it's not an either or. And I think that's what's the important thing about the slippery slope framework is that it really shows it's that interaction and it's not one or the other.
Yeah.
Yeah.
And I really think that these insights from ATO, from the Australian studies on the pyramid, the responsive regulation pyramid, the different motivation positions, that knowing this and applying this knowledge is quite important. So you don't need to be benevolent, but you have to find the right way to interact with the people. If they are willing to do the right thing, you need to educate them. If they are not, you need to be to enforce them. On the other hand, it's really hard to have these diagnostic skills as the authority and to have the tools to move from one strategy to the other.
So maybe we could talk a little bit about horizontal monitoring, you know, and OECD cooperative compliance, because I know that's a big deal right now that lots of people are talking about. I mean, what are your thoughts about that?
Well, I think the OECD is really promoting the idea of cooperative compliance, of horizontal, of partnership. I don't want to be misperceived, but to be at the same eye level, if that is clear. So I think the idea is really coming from the insight that the interaction is important, that you need people's willingness to cooperate, that you cannot treat people or drive them well, you cannot have them as the enemies of the authority, so that they are in defense, so to say, and therefore cooperation, or in other words, the interaction quality is so important. And what I learned from the Dutch experience was that the horizontal monitoring, as they call it there, is very efficient, quite efficient, when it comes to large taxpayers, large firms, large enterprises, the largest ones in the countries. And also in Austria, there is quite some enthusiasm to apply the cooperative compliance concept with large enterprises, because at least some people in the administration see that there is a need to change the paradigm of how to interact with taxpayers. There are difficulties involved with it. there is a lot of skepticism as well. We were able to do a first step evaluation when horizontal monitoring, we now call it begleitende Kontrolle, accompanied control, so to say, in Austria. When it was conducted as a pilot study, we were able to collaborate in the first evaluation phase. And what we observed was that people in the administration who were involved in horizontal monitoring were very enthusiastic. They reported to have a lot of knowledge about this new paradigm, this new way to interact. They said that they have high expectations, that they really think that there will be a lot of advantages. But interestingly, those in the administration who were not directly involved in horizontal monitoring developed the least favorable attitudes. They were very skeptical. And that was interesting because it was another example where you saw that not knowing or having the feeling of not knowing breeds distrust, breeds skepticism. Yeah? And it's really hard to move from the traditional mindset to this cooperative compliance mindset. About 20 years ago, I had the opportunity to train tax auditors here in Vienna, and we did it always every year for 2 weeks, so it was a lot of interaction. And we were teaching them about the necessity to understand people, to listen to their concerns. So we were kind of establishing at least mental clinics here, or hospitals in a way, for these poor, ill taxpayers. And everybody agreed during these seminars, during these 2 weeks. Everybody was really enthusiastic about these ideas. And we had role plays, etc., etc. And at the very end, we had a final negotiation between those trainees and the simulated taxpayer. And at the very end, it was always the mindset that the one who detects the hidden million is the hero. Yeah, and horizontal monitoring would just reverse the way of thinking, and that's hard.
We have a question about, are there researches on tax amnesty programs, especially if they are recurrent? What about tax settlements? The possibility of having a tax settlement would be a reason for a taxpayer to accept running more risks?
Well, the studies which I know on amnesties are leading to the following conclusions. First, tax amnesties provide the opportunity to bring somebody back to the legal path, so to say. And if you succeed, these people would probably consider twice taking again the risk of evading in the future. On the other way, amnesties bear also the risk of being unjust towards those who were cooperative in the past. So it's a double-edged sword, I would say, and not really easy to come to one single conclusion with regard to tax amnesties.
You know, it's interesting. There's and I've talked about this before, that the IRS does have, the United States does have a process called offer in compromise, where outside of the bankruptcy procedure, you can come in and agree, work through a formula with the IRS, looking at your ability to pay now and for a period in the future, what you can afford to pay, as opposed to what the tax liability is, with tax penalties and interest. And then you reach an agreement with the IRS according to this formula, and looking at other factors if they are there. And once you get that agreement, part of the agreement is the taxpayer's compliant for the 5 years following. They have to agree to be compliant for the next 5 years with all tax rules and regulations. And then if that's the case, their debts disappeared on the basis of that payment. And the people, when that program really ramped up, working with, I was in the IRS at that time, and listening to IRS employees, there was a whole group of employees who felt it was a giveaway to taxpayers. You know, their attitude was, these are non-compliant taxpayers, saying that they have to be compliant going forward for the next 5 years, where they're supposed to do that anyway. You know, now others were saying, look, these are non-compliant taxpayers, and by doing this procedure, yeah, they're supposed to comply, but they weren't. And now they have to comply. And if they don't comply over these 5 years, the debt is reinstated. So the public fisc is not harmed in any way. The debt comes right back. And it's very interesting how even after years of looking at data and saying, you know, we've looked at the data to say, you know, a majority of the taxpayers are compliant going forward after they enter into this program. There's still great resistance to using this vehicle widely. And that's actually very important in terms of post-COVID, you know, where people are certainly going to be behind on their taxes because they've lost jobs. They're using their money to just do basic needs and things. And so they'll be behind on their tax payments. And this would be a perfect time to recognize those circumstances and use an offer program almost in a systemic way, you know, go and sin no more sort of thing. But that would be a non-starter. Yeah.
I agree.
Yeah, it's very difficult. We have a comment of somebody from the offer and compromise saying, in the case of the offer and compromise, the taxpayers have the opportunity to learn what they did correctly so that they could clean up their act in the forward tax periods. Well, there are different scenarios for the offers and compromise. One basis is doubt as to liability, that maybe you didn't understand that you were under an audit, and now you've lost all your ability to protest that audit. The timeframes have lapsed, but you're really coming in saying, look, I don't believe I owe this tax. And there's all sorts of, that's a hard basis to get, but that is a basis. And in that case, they would be saying, compromise this tax for this amount because I don't think I owe this, and here are my reasons for it. On the other ones, it's really things about ability to pay. So there's not a challenge on whether they owed the tax in the first place. It's looking at, can they afford to pay the tax that was correctly assessed? And it's purely on the collection side. And that could be that you had a one-time event and you had a huge tax bill because of a one-time event, and you're never going to see it again. And now you have very low income, or you're retired and you're on a fixed income, and you will never pay this debt off even if you paid for the rest of your life, you know, and things like that. So it's not so much, you know, what they did wrong. It's more life circumstances that caused them to be in a position where they can't pay. So it's an interesting program. And very much, in my opinion, underutilized, but one that should be interesting to other tax administrations. And I have been surprised throughout the world that so many tax administrations focus a lot on audit, and they don't focus a lot on ability, you know, the tools that the tax agency may need to have in order to deal with tax debtors. Because when you have tax debtors, and I remember this from meeting with the Swedish enforcement agency, that they just kept seeing debt as a cycle. You know, you never got out of it. And so if you have a tax debt, then that led to another tax debt, to another tax debt, to another tax debt. And some of these tools became not so much a giveaway as really being able to get that person back into the system. And again, what I liked about the offer and compromise is, if you don't stay in that system, then you're back to where you were in the beginning. You know, so there is a consequence if you don't stay compliant, you know, so it's not really a giveaway. That was I'm sorry.
No, but perhaps we learn something from some of these latter studies, these nudging studies, which offer installment rates.
Right.
We'll see whether people are using this opportunity or not.
Right. My criticism of the letter studies that the IRS has done is that they're heavily on getting a payment or any payment without looking at whether the taxpayers really have the ability to pay. And I would want to see more discussion of, there are opportunities. If you really cannot afford to pay, there are things that we can do for you there, even if it's temporary. You've had a temporary setback, like the COVID pandemic, job loss,
Yeah. Well, I think these letter studies are really on fashion at the moment, but I'm not sure whether we are still learning a lot, besides the fact that if you remind people, then a percentage reacts.
Yeah.
But it would be interesting to see, to look behind the effect of these few sentences in these letters, because it's indeed, my assumption is that in many of these studies, we don't have representative samples of taxpayers, but specific groups of taxpayers. And it would be, I think, worthwhile to think about what different kind of messages mean to those groups of people with their certain, in terms of Valerie Braithwaite, motivational postures, and why and when they are effective. So we would need much more insights to understand what people, what drives people's behavior, especially if they are not capable to pay the amount of taxes.
So I do want to open this up for the last few minutes for folks. If they have any questions, they can put it in a chat, or they can tell me in the chat that they want to speak, and I'll try to unmute you. Sometimes it works, sometimes it doesn't.
Hello.
Hello, yes.
Well, thank you very much. This is Roman Marevich. I'm from Canada Revenue Agency, but we're not allowed Zoom. That's why it was from me, it said on my desktop. I have a question. Thank you very much for very, very interesting discussion on various points. I have a question when it comes to cooperative compliance in relations to the large corporations. In the 90s, one of the major, I guess, fives at the time, it was before Enron, came out with a study of it was a world study of corporations, where they surveyed the way tax internal to corporations, tax offices operated, and they recommended that there be a strategic shift from having tax office as a tail end of organization after they've done all the whatever they do and time to declare profit or loss, to move it to the C-suite, to have it as basically a profit-making center. Mm-hmm. And that paradigm, well, it's been essentially still there for the last quarter century. How does one, when you do have partners that still have that as part of their operational paradigm, to view taxation as a corporate, as a profit center, how can you establish a truly collaborative relationship with them?
Yeah, well, indeed, in that case, I think it's really difficult, because you violate some of the principles of trust, actually. But what I learned from cooperative compliance as it is applied now is that the major advantage seen by the corporations must be planning security. The tax control framework, which is established, and planning security. I had the feeling that most of the enterprises which are in the program, in this project of cooperative compliance, don't have the problem of paying taxes or not at a certain amount or not. But the major problem is planning insecurity. And from the studies I know from Martin Siglet, for example, it was this tax control framework established in the enterprises, which was seen as a great advantage, and planning security. Not so much the amount of money they pay or the other one trying to make profit.
My recollection is that in the Netherlands, they also tried to do it with small and medium enterprises, but that didn't work. Do you know anything about that?
I don't know whether it did not work, but definitely it's difficult. You know, the problem with or the problem which I see with horizontal monitoring in the Netherlands, but also in Austria or in Slovenia, for example, is that there is a group of enterprises which can take place, both because the resources in the administration are not such that they can include too many enterprises, and because others are not meeting the requested standards. So this is a problem which immediately leads to suspicion and justice, fairness issues. And that's with large enterprises. And with medium enterprises, it's even more difficult because there are so many. And you would have to evaluate, to judge, to scrutinize all of them before having them entered in the program. What they tried was to work with tax advisors and as intermediaries. I don't know any evaluation study of the program, but I hear voices that it's difficult.
Yeah.
But I think one issue which I observed as a researcher was that, interestingly, in several countries they applied this new project, this new paradigm, but forgot about evaluation. And that makes it really difficult now to come to conclusions of whether it pays or not. And it seems that on every level of the administration, they have different expectations out of the program. On some levels, they would say, as we heard before, that the goal is to get more taxes, right, to get more money, which is absolutely not the goal from my perspective. The goal is that you facilitate the process, that you have less, how do you call it, less clarifications at the court, right, amendments and so on. So you have to define first what you want to reach, and then to establish an evaluation project for the whole stuff. And I don't know whether the Dutch really started evaluating their HM with medium enterprises. Right.
So I do want to make sure that people have a chance to ask any other questions folks have. Erik's been really generous with his time today, but I guess I have one thing, which is, what do you think you're working on next? I know we've talked about taxes and emotions, and I've certainly been nudging you, nudge in the direction of collection or something, really thinking about what happens. We focus so much on audit, but then how people feel about the government collecting the tax, which is really where it has the real impact on the taxpayer, whereas audit might be abstract until you go about trying to actually claw back that money.
Mm-hmm. Yeah. Still the focus is on emotions, incidental and integral emotions. We distinguish between emotions which originate from the behavior or the decision process in which you find yourself. So, for example, you might file your taxes and find it difficult, bureaucratic, costly in terms of time, and you get angry, etc., etc. So how would anger or anticipated regret, fear, etc., affect your compliance behavior? That is one approach or one research question for the future. Another one is related to incidental emotions, like the mood state in which people are when they take decisions or when they interact with tax authorities or file their taxes. We know from financial decision making that the mood state might have an impact. And interestingly, a study with colleagues in Berlin and Hanover showed that people, when they are in a good mood, tend to take higher risk. So people in a good mood seem to be less compliant than when you're in a neutral or in a negative mood. Or now, if you want to really make this speculation, if people file on weekends, where they're usually in a better mood than during the week, they cheat more than when they file during the week. But this is very speculative. It's just an interesting research question. We also, Stefan, whom you know, a colleague of mine, is very interested with his team to study all these different kinds of operationalizations in the laboratory experiments, because there's still one concern that different methods leads to literally different results. And he and André, a colleague of mine, André Hartmann, they want to see whether people are more compliant if they declare their income, if they declare how much tax they pay. Interestingly, all that makes differences in the laboratory. When you declare your gross income, our idea is that taxes are perceived as a loss, which means that you risk taking. When you declare how much tax you pay, you might perceive it as a foregone gain, and you become less risk-seeking. So that is one issue. Another one is by Martin Müller, whether the economic theory of tax evasion can be tested in our labs. Because if you assume that people behave according to audit probabilities and fines, then you need to make sure that people perceive the information about audit probability and fines in case of evasion. And he's studying in very academic settings and research plans the eye tracking of information which people might consider in their decisions. So this is very, I would say, very basic research in this area. But I'm also interested in justifications. So from emotions to justifications for wrong behavior. Usually when you take a risk or when you choose a risky option, something can go wrong. You invest also in thoughts about what to do in case the future does not develop as you want. And these risk diffusing operations have not yet been studied in the field of taxation, of tax behavior. So that is one issue. And related to the pandemic and the economic stimulus measures, we are also interested in the difference between the perception of tax evasion and social benefit fraud. It seems that in the Christian cultures, that evading taxes is to a certain extent well accepted in society because it's your money and it's taken away by the tax officials. whereas taking advantage of benefits which you should not, is not accepted. That's stealing.
Interesting.
And we want to see how in the population these behaviors are perceived.
That's really interesting. You're retired, right? No.
I am retired.
Yeah, it doesn't
Or
sound
tired.
Yeah, it does not sound in any way possible. So I just want to thank you for spending this time with us. It's just been really fascinating. And thank you very much, everyone.
Thank you, Nina.
Being here.
Thank you. Thank you very much.
Bye-bye.
Bye.